Right, this is the blog for Friday the 10th of August, day 45 of 65 of the Compound Effects Challenge. So just finishing week 9 of a 13-week challenge, making forward progress every day, applying my edge and method and making sure I'm doing all the little things and compounding my way forwards. So what I've done here is currently the markets are still open, but Fridays I just shut down the system and leave it as far as just taking the morning, just knowing that, especially in slow markets, but overall in all markets, just don't want to be part of Friday afternoons just because the volume can really start to drop off. Also gives me opportunity if I need to finish up the week. With Australian trading hours, sometimes really need to have the afternoon off to get ready for the weekend, so I just don't want to get in the habit of always trading a Friday afternoon. So for that reason, just to keep consistency, easy to shut the system down come midday or around the lunchtime period. So there's the daily chart. I mean, we're still up around those highs up there. The 15-minute chart here, it's interesting, as we're coming down, we're holding. I mean, obviously in the cash market here we've broken up above this new trend line that I've put in here, but we're holding underneath it, certainly getting some pressure on the downside. We're getting underneath this significant 96 area in the market. It's probably the most relevant market price in the marketplace at the moment. The market keeps on reacting to it. While below it, believe the market could possibly hold and even start to have a downward day. So my bias was certainly more on the downside for the day, but you can see that we're now pushed up above it. Now we're using this trend line as support. So that's a bit of an overlook of the morning so far. So for myself, here's the order block that I've drawn in here. So there's a couple of them when I first started, and it kind of impacts the area as well, but I was considering whether I should place the order block down here or place it up here. So in the end I've gone with here. I just wanted to be a little bit more safe and place it on the top of that area there, even though this one certainly had more significance because of this key area. If there wasn't a key level there, definitely would have placed it up where it is, but considered placing it down here because of the key level. But I was happy to go with it there. But in the end, it was very close to a downside trade, with my overall bias to the downside and all the markets opening up and pushing down. But just need to be careful of false moves. The Nasdaq, what was it? Yes, it was the Nasdaq. To start off with, didn't want to go lower. It was all other markets were breaking its lows, and it was sitting well above its lows. So this first region here we popped out. Thought it was certainly a fake move at this stage, which it proved to be. Popped back up, started heading back up to the highs. Then started thinking, well, maybe it's going to start heading back above these sort of key levels here. Then turn around back to the downside again. This time the Nasdaq led and started breaking its lows with the other markets. So a lot more interest in this area here. Once it got outside this area, looking for to use this as resistance to sell lower. Just didn't push down out far enough. Basically waiting for it to go 4 ticks. So it was a tick from actually getting in the trade, and in the end it's ended up popping back and went in the opposite direction anyway. So no trade there. And of course, I mean, all this pressure on the upside, interested in seeing how it would push up and seeing if it gets some sort of directional break to the upside after seeing the downside make a couple of fake moves. I was looking at this level up here. You can see in the end 96 played really well. Bring up the 1 minute chart. Here it is here. So bouncing off the level here, then eventually went about 12 ticks. But I was fine. I'd already predetermined my order block, so we didn't actually get up far enough and break out of that region to get a trade in that area here. And even when we're starting to get up around here, by this stage, the Russell was making, basically really resisting to the buyers, so it was holding down low, and every time it sort of get to its highs, it quickly popped back into the range. So when we actually started breaking the actual predetermined order block or break block, the Russell was certainly on the downside and not really wanting to head that way. And eventually, that's why these other markets have a great way at, if you can interpret what these other markets are doing and use them to help trade this market, they can often provide a heap of guidance, because in the end the markets, ES has kept trying to push higher. I mean, it was obviously wanting to go, but this, the Russell and the fact that it was holding its highs and kept on coming back into the range has eventually got to probably drag this market around and had a real decent sell-off here eventually. So even through this region here, now you can see we're getting underneath this key level here. So there's a couple of ways to approach this. I mean, obviously it's a key level, so if I believe there's momentum, so a new trend starting, you look for it to pop up, sell here and get a continuation of the trade. So that's what I call a momentum or a 5-minute fade. Or the flip side of that is just seeing it as a pullback and use this as a support area to buy, or take it as a 5-minute buy, or my version of it's a continuation trade. So just to keep it very simple, following what determines momentum or direction for me is the moving average line. So through this area here, when we're getting underneath here, just seeing it as a pullback, not interested in the sell through here. It would have been stopped out anyway, but because the moving average and momentum on the upside, the 15-minute chart's definitely seeing this area as a buy. So as we're pulling back here, looking to see how the market reacts to this key level here. So just looking for basically to push through, then come back and use it as support. So in the end, I had an order on at 65.50, so just went a couple of ticks above, just looking to get filled, and also represented this area here. If I bring up a 1-minute chart, looking for it to come back, seeing a bit of support with these little few areas here as well. Eventually held and went higher, but in the end it's just gone 8 ticks, and you can see the actual, by the time, basically 1-minute chart, let me bring it up again, I'm actually getting in, when I get in, when I pushed up here, I got in here, but eventually the actual 5-minute buy, which we took for the room, came out about here. So you can see, end up being the exact same entry, just a couple of minutes difference as far as when we entered. But eventually the trade's gone 8 ticks. There was actually no exits at 8 ticks. But then so move stops to break even, and that's what eventually come back and hit the break even, and we're still hanging around that area now. For myself, like I've been doing this week, I pulled out a third of the contracts at 5 ticks at 1R. So I ended up being a third at 1R and the other 2/3 at 1 tick into profit. So overall a 2.5 tick gain. So this particular week, even though it's been a very limited week as far as winners, just the one winner for the week, which is quite unusual out of 7 trades. So 1 winner, 3 break-even trades, and 3 losers. But from that, I mean, the 3 losers, unfortunately none of them I was able to pull out any none of them got to 5 ticks. They were 5 tick, and a 4 tick. So as far as the losing goes, 14 ticks lost from 3 trades. That's quite a big loss as far as I'm concerned. Looking to at least pull some return out of these losers, and normally we do have losers as well, not have such a high average. Get them down around 4 3-tick losers. So as far as this week goes, quite a big hit on the losing side, but the good side about it, pulling out some return at 5 ticks has meant that these break-even trades, pulling out a lot more than I normally do if it's just sitting at a normal break-even trade. So overall for the week, including the winner, actually the winner and the break-even add up to about 17.5 ticks. So still with that poor strike rate as far as winners to losers, still managed to be up 3.5 ticks. Then you take in commission, ends up being a couple of ticks up for the week. Anyway, so you can see at the moment we're still hovering around that entry area. The market's probably going to really slow down and be a quiet afternoon. But that's a wrap up for Friday and for the week, and we'll be back next week.